Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this Thursday, November 14th, 2013. Markets continue to trade sideways off of a little bit of an up move this morning. S&P's up 7 points, Dow up 49 points, and the NASDAQ is basically flat. The NASDAQ is flat because Cisco reported poor earnings. And take a look at Cisco today, guys. Getting absolutely annihilated. This is the intraday 10-minute Cisco chart. And as you can clearly see, it had a gap down. It's just gone sideways the whole entire day. If you look at the daily chart, just a mammoth drop to the downside, even taking out this gap fill right here. So there's a gap fill, we gapped below it, and it's maintaining that. So again, Cisco reporting very poor earnings out there, and really that's just taking away from the NASDAQ. So NASDAQ itself, it's a huge component of the NASDAQ 100. This isn't a small company, by the way. Cisco has a market cap over $100 billion. So the fact that this is dropping over 10% is a huge hit to the NASDAQ 100. If you take a look at the Qs here, let's bring up the Qs, which is the NASDAQ 100 tracking ETF. You can see that this is basically, it's here's where we closed yesterday and here's where you are. So you're up 7 cents on the day. It's keeping the NASDAQ essentially under wraps. Now again, the S&P and the Dow are inching a little bit higher, led by stocks like Exxon, which is up 71 cents, and a couple others. But overall, it's just a slightly higher day after the majority of gains happened yesterday. All right, now yesterday we had the gap down and the reversal where we closed at the highs of the day. Today you chopped sideways, had a little bit of a pop, and have then gone sideways. Now yesterday the markets rallied sharply because Janet Yellen, who's taking over for the Federal Reserve in January, all right, from Ben Bernanke, she basically was going to discuss and testify on Capitol Hill today, which she did do. And the market yesterday, knowing how dovish she is, rallied because they thought she was going to be super kind in what she said. And today, really, she didn't disappoint. She didn't really come out and was that dovish, but she was just very straight up. She handles herself well, I thought, and the market just liked that, liked the confidence, right? Markets love confidence, and I would say that's the majority of why the markets are basically flat to positive today, is because she came across relatively well. The congressman didn't hammer her too hard. They asked her some decent questions, but, she didn't get flustered, and I think that's the big question mark in everyone's mind. All right, well, you have this new Fed chief taking over. Can she handle herself when people throw questions at her? And then, in all fairness, the congressmen were a little bit on the lighter side, I did feel, because she hasn't been in the helm yet, so they weren't hammering her as much. But I did think, again, that overall, nice job, well handled across the board. Markets made their high during her testimony here, have since backed off. You actually have a small bearish pattern on the intraday spiders. Now, we have to break the 20 MA, and the volume is dead. Look at the volume today, guys, in the afternoon session. It is lighter than yesterday. It's lighter than the day before in the afternoon. Now, the morning during her testimony, we actually had decent volume here. But in the afternoon, the volume has just gone to sleep. Amazingly gone to sleep. All right, so just something to keep in mind there. Super light volume. Yes, you have a slightly bearish pattern, but unless you get upticks in volume, you're not going to be able to break down. So that's really the key here, is just to continue to watch the SPY and see if we break down. And if we break down, then by all means, this market, again, will get more volume, and you could fall pretty quickly. One thing I've talked to our members about here at InTheMoneyStocks.com is that, as we inch up a little bit, you have a 1 to 3% window of upside potential in our estimation based on the charts. All right, and our charts have served us, obviously, to make a lot of money. Net gain over 300% this year in the research center, adding up all the percentage gainers minus the losers, and you net over 300%. But that's the upside potential based on what we're seeing here. The downside is a lot scarier looking. So yes, could they keep the market floating little by little here today? We're up 69 cents on the spiders. Yeah, we could float up a little bit more. But if something happens, if something derails this, the market has potential to fall 5 to 10%. And there's even a crash scenario where it's only about a 5 to 10% chance out there that could happen. But if it did happen, you're talking about a loss of 20+%, possibly in a day or two. So, just in terms of analyzing what you have to do, which is every individual investor needs to analyze risk-reward. And they need to look at the daily chart, essentially, and say, all right, This is the S&P on the daily chart, right? This is where we've come from. If you go back to 2009, we were down at around 67 on the SPY. We're now at 179. So you're talking about, about 200% gain on the markets from those lows. So what you need to say to yourself is, all right, so what's the positive about me being long the market? Okay, so I could make 1, 2, 3, 4%, maybe max, something in that range, as opposed to what's my risk. All right, so for me personally, yeah, I have a couple longs out there. I do. I own Nuance on the long side, and a couple little other plays I have on the long side. But for me, it's not worthwhile to be in ETFs on the long side or index funds or anything like that because I'm risking too much just to get a little bit of a gain. If someone told you that if you bet $100, you might be able to make $103 or $3 off of your 100, so you'd net 103, getting your money back plus $3. Right? So maybe you'd make $3 on the whole thing, but you could lose your full $100. Would you ever take that bet? All right, no, right? I mean that's silly. I would never go up to someone and say, "Here, I want to place a bet where I can make $3, but I can lose 100." You just don't do that. So you have to kind of apply that to the market as well. I think it's very important to apply it to the market. And being up at these levels, I mean, it's obvious that you're in a bubble or the creation of a bubble. The big question is now, does that bubble burst at some point in the future, in the near future? Does it burst by the end of 2013, in 2014? Right now, the bigger burst we're looking at for 2014-ish in that period. It doesn't look like we'd have some sort of crash before then. But again, one of the little catalysts that you'll see some panic towards the end of this year coming into is that in January and February, you're going to be dealing with the government possibly shutting down again and the debt ceiling. All right. Plus, this whole Obamacare thing is just a mess now. Republicans and Democrats are squaring off again and trying to repeal it from the Republican side, and that's only going to create more animosity going into the debt ceiling discussion as well. So, these type of things. It's just unfortunately with our government, as crappy as it is, it's just there's never an easy out. It doesn't seem like people were willing to work together any more than they were a month ago, 2 months ago, 6 months ago. Okay. If anything, it seems a little bit worse. On the intraday, spiders are actually trying to inch down here, but again, without volume, it's hard to believe that we would see much of that in the short term. All right, couple stocks on the radar today that are performing well. Let me just take a look here. We are seeing Amazon. Amazon's doing pretty well here, and let me just see here. So Amazon, yep, Amazon's having a nice little pop up today, trading near the highs of the day. This stock's actually up $11.50. What's interesting about Amazon is that, and I've day traded a little bit today, which is nice. A couple little shorting opportunities for small pullbacks, but this little double top is coming into play, and I actually like this area as a little potential short, just as a day trade. Swing trade's a little trickier because you've had a 2-bar surge, so you want to let that 3-bar surge come into play before you think about a swing trade short. But right now, look at that double top, which is at the 168.40. I'd let it pierce that maybe 168.55, 60 area if it goes directly into that. If it does, then I do think there's a good shorting opportunity there. Other stocks that are performing well today in tech land, you have Apple. Apple's inching up a little bit. Apple's still slightly bearish overall from this wide range bar down move. All right, wide range bar here. You had inside bar consolidation. You collapsed. Now more inside bar consolidation here. It is getting a little bit of a pop, but really, unless it takes out on a closing basis this high, I'd be very cautious on Apple. Once it gets above that, then you have good potential upside. Upside past that point actually could take you all the way back, in my opinion, to the almost 600 level. So kind of an interesting little bit of a thing to watch there. All right. Chevron, Exxon are doing pretty well today. We talked about Amazon. Google's up decently. Baidu's actually having a good day. Chinese stock BIDU, very, very solid day on this stock here. And you can see after some ugly action to the downside off this level up here, the stock is actually propelling its way back up. I actually can't help but wonder if at some point we're going to break through this double top high here. And again, this is the high from 2011. This is where we initially pulled back. We'll see if we trade up there, how we trade up there, and then whether or not it's going to break through. I think that's the big question there. Okay, so we'll see how that goes. Just trying to take a look. IBM is weaker today. Was down much, much more earlier, but has come back. And you can see this chart here. Essentially, the buy the mentality is alive and well in most charts out there, and we continue to see that. So we are seeing even stocks that have bad news getting pummeled and then reversing, as long as it's not directly for their company. Now, you're seeing a lot of old school tech stocks getting beaten down today. For instance, IBM was down sharply this morning. Why? Well, because Cisco reported really bad numbers. So anything that's kind of that old school tech like Oracle, those type of stocks out there. Hewlett Packard's another good one. Take a look at HPQ, down $1.34. Very ugly down day, unless while it is making a bullish pattern and is trying to break out here. But a lot of these old school plays got hammered on the tech news there from um, the whatchamacallit earnings, the earnings from Cisco. Okay. Just a side note here, guys. Take a look at Amazon. Amazon into that double top just hit 38.40 to the penny here, which is exactly a double top. I'd still like to see a pierce, but I may take a little bit of an intraday short here as it's surging up. And you can see it had a little pause candle right here, but if it surges and pushes through by a little bit more, I may take a little bit of a shorting opportunity. We'll watch and see how it goes. But right now, that is what I'm looking at here. Great day on Amazon, though. I have to say, really big day. And again, looking to take out this double top. It's right in there, and there it is, just pierced it by 2 pennies. I want to see a bigger pierce, but it might be one of the shorts this afternoon. I got to watch it a little more closely. I might let it go through 369 before I pull the trigger on that, but it does look tempting to me, no doubt about it. All right, on that note, folks, I'm going to step aside. Some nice movers in small cap China land, some big movers there, some biotechs are also having a good day. By the way, one little last thing I want to mention here, even though the S&P's up, take a look at IWM. IWM down 15 cents on the day. It's come off its lows, but I think it's worth mentioning here that the small caps continue to underperform, which is something relatively recently we've seen. It's definitely on the newer side. So yeah, I mean, just in terms of a leading indicator, we often talk about the IWM as being a good leading indicator, and we are not seeing the leaders come from the Russell. Russell is not leading anymore. All right, what that actually, interestingly enough, what that tells us that is that risk, believe it or not, even though the markets are at their highs, it tells us that risk by bigger institutions and hedge funds is being lowered. And you might say, well, how come that's the case? Well, because the large cap kind of mutual fund stocks, those are going up because individual investors are putting money in the market. So the average investor is putting money in, and a lot of these smaller caps are stalling out now and coming back in as institutions start to distribute them. And again, you might say, well, how do you know that the small investor is coming back in the market? Well, if you look at the numbers, and these numbers are published, the small investor in 2008 pulled out $200 billion, and this year in 2013 they put 170 billion in. So I mean, there's no doubt about it that the small investor is back in the market, at least to some extent. And 2008 was the big year where they pulled out money. So I mean, just goes to show you right there that if they pulled out in the worst year, 2008, of the market before we bottomed in 2009, and that was 200 billion, and they've already put 170 back in this year in 2013. We still have another month and a half to go. I mean, it's almost going to be equal to that aspect. Interesting thing on Amazon, guys. I didn't get filled here. I just doing this video. It's hard for me to trade live while I'm doing the video. I do it occasionally, but we have already pulled back 50 cents, and you actually got a perfect pierce of that level. You went up and pierced the 368.50 level to 368.58, 16-cent pierce, and actually have pulled back below 368 now. So that's over a 50-cent pullback. So again, I didn't take it, but nonetheless, the level was firm. And you just look for these little types of things, guys. Great little setups. And again, you're back below the 368, or right around that 368 level. All right. On that note, I'm going to say goodbye for now. And again, as always, come take the 7-day free trial here at InTheMoneyStocks.com. Hope to see you guys all soon. Have a great afternoon, great evening. Take care.